So this is the euro dollar analysis for Tuesday 21st of November. So let's have a look what happened with prices on the 20th. Monday the 20th of November. So we'll just grab the pen. As we can see over here, we did come down into the 1728 just over here. We came down into the 1728 region, which is a weekly pivot from I've had the under charts for a couple of weeks now. We did get a reaction there. If we didn't get a reaction around the 1728 mark, we'd be looking for the 1710. So we saw a strong reaction from the 1728. We came up to pretty close to the 1810 level. Another weekly pivot as is marked out here in blue. We did have some resistance in around that 1810 level, and before we saw the sell-off and the subsequent recovery up to 1810. So from the sell-off from 1810 all the way down to 1728 and back up again. So from the 1810 we saw the sell-off back down to 1828. We came up again. We rejected also. Now we seem to have found some kind of support there at present. The size of the candles, they don't really make us too enthusiastic about the level holding at the moment. Ideally, we'd like to see candles of a reasonable size. Like for example, say this red candle here. We want to see a candle of that sort of size, because the problem with these small candles is we might retrace upwards. As the European session opens, we might come back down to 1728 and eventually go down to in and around the 1710 level, below which you would possibly looking for prices to come down to the 400 period moving average down here, which is marked out in black, as well as these swing lows in around that 1670 level. Now, if we do hold this 1728, we are definitely looking for prices to move back up to the 1810, where we've had two rejections so far, possibly moving all the way up to 1830 to the upside, and possibly these most recent swing highs all the way up at 1860 may come into focus. But we have to be aware that we've got a high there, we've got a lower high and another lower high there again. Even though we've had a double bottom, we've had a series of lower highs, which possibly suggests that prices are going down, more likely to head down than they are to head up. So we do have a somewhat short side bias at present in the market, in light of the most recent, due to the fact that we've had a series of lower highs, even though we had a double bottom just there. So we might recover, might not recover all the way up to the 1810, we might recover to this 1780 before we see some sell side momentum taking us down to 1710, below which again we'll be looking at 1670s. Below that mark we'll be looking at the 1612. At present, as we are up at 1740, I can't anticipate us going much below 1612. So I'd expect around that 1612, 1580 to be the far end of the zone. To the upside, I can't anticipate price getting much beyond the 1860, which was which is this most recent swing in the market up there. So yeah, I think that's all the major levels. Again, on the daily chart, let's see the chart, the post. What did we post on the daily chart here? We posted a bearish candle. So as we can see on the charts here, we had a pin bar up there in around at 1860. We had a little bit of consolidation. Then we've had a strong bearish candle closing near its lows on the 18th. Let's just clean this chart up a bit. So strong candle there, closing near its lows on the 18th. So we do look poised for more downside momentum, and we are overall we can see here on this daily chart that we've had our highs, lower highs, lower highs. We've had a pretty much a similar to a double top up here in around the 1830 to 1860 zone, and we do seem to be having some sell side momentum coming to the market for retest of all those major levels previously mentioned down below. So yeah, that should wrap up the euro dollar analysis. Thanks for watching.